What is going on, guys? Welcome back. It's been a little bit. Dividend investing. As always, look in the description. Robinhood, you get a free stock. I get a free stock. A couple months ago, someone pulled a Microsoft share, which I'm still holding. They're still holding. And, listen, I want to talk a little bit about where I am today. Obviously, up over 30%, almost $1,300. I know that if you're just listening to the media, that seems too good to be true, but there's a game plan. I really had to take a football-esque approach of discipline, patience, and executing a game plan, and knowing that if I do, looking at really one of the biggest crashes in the history of the stock market, I could create generational wealth for me and my family. And that's something that I can't be short-sighted on. Go back and look at the numbers. Any investment in the stock market during those crashes profits years later. So what I did is I looked at some of the positions I had and first tried to assess, do I need a dollar cost down, and are these good investment companies? Do I trust these companies with my money? And I want to show Gladstone Investment first because it's a BDC. It specializes in small business buybacks. This is a company a lot of people are running from. You can see my average cost, $11.93 versus where they are, $9.89. That's not the best balance there, but I set a price target under $10 to re-enter, and you can see I've slowly been buying $8.43, $9.87, even $9.98. And you can see that was rewarded. This is payments through July 30th that they're going to make to me through dividend investing. And I mention this to you because there is a supplemental payment in there. I know a lot of companies have pulled supplemental payments. Gladstone has not. That's them rewarding me as a stockholder and my faith in the company. Now, one of the other things I've done that kind of worked on the other side is I realized I'm not always going to get companies at the lowest point. Did I buy Disney low? Sure. Did I buy AT&T low? Not really, ultimately, in the scheme of things. But when I invest in an ETF like the PowerShares S&P 500, I love how high dividend, low volatility. There is no low volatility, in my opinion, anymore. But I set a price target. I'm not going to re-enter under $30. And you can see it really hasn't been under $30. It's had some times where it was close, but nothing where I felt comfortable re-entering. This is a stock. I'm at $28.54. I'm up $3 or $4 a share if I elect to get out at some point and put back into actual stocks and companies that I want to own. Other companies looking at how they're going to be impacted from a financial standpoint. Stag Industrial, talked about them a lot on the channel. You can see I'm back here in April, beginning of the month, really buying at $21.05, buying at $21.49. It's a stock right now, $24, $25. And you can see just a couple months ago, I'm buying at $28.80, and I'm okay with that. But again, rewarding me as an investor, going and looking through July, they've put out their dividend and declared their payments and dates. So those are things that are really important to me. Going and looking at companies, sure, if they're going to cut their dividend, I'm not going to be one of the ones that sells right away. But, when I look at companies right now, my focus, companies that are on a discount, that have already promised payments out through July, that are seeing the ability to pay through this. And I think a lot of people will tell you, although we're going through very difficult times, things could be very good in 3 or 4 months. They could be worse, certainly. And that's the inherent risk you take in investing. But right now, I'm looking at these companies that are guaranteed to put money back in my pocket, buying them at a low cost, and then knowing that I'm putting myself to what I feel is the best position to recover once things are back to normal. And obviously, as I said, you go back and you look, a lot of these companies, if you've bought in, I would say in the past 3 to 5 weeks, anything pretty much, unless you're buying the ultimate in speculative stocks, I would think that you're probably in a position to have made money over the past few weeks just because things have started to kind of recover and find their value. I don't know that we've seen the bottom. I think a lot of that is going to depend on the health of the economy, and most of that depends on the health of our citizens. And right now, I don't see that getting any better. So there is some concern there that the market seems disconnected to the health of Americans. But at the same time, business does still have to go on, whether people are here or are not here. As harsh as that seems, if I were to be gone tomorrow, businesses would still carry on. Coke is still going to sell soda. Pepsi is still going to sell soda. These companies are still going to continue whether I'm here or not. And although it's very difficult to look at it in that light, that is the reality of the situation. And looking at it that way, and again, devising that game plan and setting what I feel are actual price targets I have for the companies, reinvesting to those that are rewarding me by paying me, I think is going to ultimately in the end pay off very well. But obviously, I think everyone has a different opportunity in front of them. Some of them are just buying random companies that they feel are low and trying to swing trade them back on. I'm not swing trading anything. I'm a dividend investor. I'm here for the long, and I'm always looking for the opportunity to buy at a best cost. Love to know what you guys would think about this. Appreciate you checking it out, and I will be back very shortly with more commentary.